Perfect.
Perfect. That worked. Hi, everyone. Thanks for having me. Yes, I'm Lisa Poino, and I'm here to talk to you today about a new requirement imposed on small businesses. If you own a small business, you are likely going to need to file this report. And you have about 40 days left to do so. The due date is January 1st, 2025. So I'm going to talk to you about what that law says, what is required, and I'm going to walk you through some slides, and then I'm going to show you how to fill out the report as well. So let me pull this up for you. Okay. So we are here today to talk about beneficial ownership information reporting and what small business owners need to know this year. Very briefly, I'm Lisa Poino with Wolters Kluwer, and I speak quite a bit about this new requirement on small businesses. I also do program management work on other products and services. So here's what we're going to talk about today. I'll briefly cover who Wolters Kluwer is, and then we'll focus on what the CTA is. So the CTA is the Corporate Transparency Act, and that is the act that requires this new report. I will talk you through who needs to file the BOI report, what's reported, when it's due, when you need to update it. I get lots of questions, is this like a tax return? Is it just due once a year? So I'll talk you through that. The penalties involved for not reporting and how to prepare to file and where you can file. All right. So very briefly, Wolters Kluwer, we're a global provider of expert software solutions and services across many industries. We focus on compliance solutions, and given that this new requirement is a piece of compliance for small businesses, it made sense for us to get involved and develop a solution where you can file your report, as well as track that report over time. So let's jump into the law. So, what is the Corporate Transparency Act and why did Congress pass it? So, the Corporate Transparency Act, pundits have said it's probably the most significant piece of federal legislation affecting small businesses in 100 years, basically since the US securities laws were enacted in the 1930s. The law went into effect in January 2024 and represents a major shift in how the federal government. There we go. I think I'm just off of mute. The purpose of the CTA is to curtail bad actors from being able to hide behind corporate structures and shell companies to commit illegal acts like money laundering, the financing of terrorism, tax fraud. So the CTA requires nearly all small businesses to file details about who owns them and who controls them with the federal government, specifically with FinCEN, the Financial Crimes Enforcement Network within the Department of the Treasury. Now, who does this new law affect? FinCEN is expecting 32 million entities, 32 million small businesses to file beneficial ownership reports this year. And if you multiply that by the number of people who own and control them, we're getting to a meaningful percentage of all Americans that are going to be touched by this law. There are legal challenges to the CTA. We've been watching them closely. There was one court case in Alabama that ruled the CTA is unconstitutional as to the plaintiffs. So it only applies to the plaintiffs. The rest, the other 32 million of us, still have to report. And that same argument has been tried in other jurisdictions and has not succeeded. So as of now, according to Janet Yellen and the language of the law, most small businesses, 32 million small businesses, are required to file their report by January 1st. So now we're going to change topics and talk about who this affects. Who are these 32 million entities? And really, my hope for you today is if you're joining this webinar and you're not sure whether you need to report or you're not confident about what's included in the report, I hope you feel a lot more comfortable and confident at the end of this webinar. If you do have questions along the way, please put them in the chat box. And at the end of the presentation, I will go through those questions. So the hallmark of what makes an entity subject to this law, they're called reporting companies, is if your entity needed to file a document, typically this document would be articles of incorporation or articles of organization with a state secretary of state's office or similar office in order to be created. So for instance, in the US, an LLC is not an LLC and cannot transact business as an LLC until articles of organization are filed with the Secretary of State and that filing is acknowledged. On the other hand, some states allow sole proprietorships to be formed without filing any documents with the state Secretary of States. If your entity is that type of entity and has not filed a document in order to form, you would not be subject to this rule. If you think about it, this rule applies to small businesses, but it also applies to other entities like homeowners associations, trusts, again, given that if they file the document in order to form themselves as a corporate entity, that is really the gateway. So if you are the type of entity that has done such a filing, you would be subject to this rule. For foreign companies, if foreign entities formed overseas took the proactive step to register to do business in the US by filing a document with the Secretary of State's office or similar office, they are also subject to this reporting requirement. Now, there are many exemptions. FinCEN released 23, but keep in mind, very few small LLCs, corporations, and other entities will qualify for this exemption because the underlying goal, remember, of the Corporate Transparency Act is to uncover business ownership that's able to be concealed within corporate structures. So the entities you see on this page, these exempt entities, they're already highly regulated by the government. Lots of this information about beneficial owners are already disclosed to the federal government. Think charitable organizations, public utility companies, insurance companies. There is one exemption I'm going to pause on in case you may be able to take advantage of it at some point down the line, or perhaps even now. That is an exemption for a large operating company. You would need to meet all three criteria, not just one or two, in order to take advantage of this exemption and not have to file your report. So a large operating company, you would have to have more than 5 million in gross receipts or sales from US sources filed in the prior year, more than 20 full-time employees in the US. That is the factor that catch a lot of small businesses and puts them in the category where they still would have to file, as a lot don't have more than 20 full-time employees in the US. You'd also need to have an operating presence at a physical office in the US. So again, you would need all three. If you just have more than 5 million in gross receipts or sales, but you have 19 employees that are full-time, you would not be able to take advantage of this exemption. So once you've determined whether your entity needs to file, then let's talk about who is listed in the report, right? I mentioned FinCEN requires us to list who owns and controls the company. So the way that they define it, and it's an unlimited amount of people, whoever qualifies under this definition would have to be listed. A beneficial owner is defined as any individual who directly or indirectly exercises substantial control over the company or who owns or controls at least 25% of the reporting company. So it does include owners, but it also includes people with no ownership interest but who have substantial control. And FinCEN gave a couple examples of what is substantial control. It said people who can make decisions about major expenditures, people in senior positions, meaning if someone is carrying out the duties of a CFO or a CEO, even though they don't have the title, that person would qualify as having substantial control. People who have the ability and authority to appoint or remove any senior officers, that would be considered substantial control. So it is a broad definition. I've gotten some questions. I have a small business owned by a husband and a wife. The ownership interest is in one person's name, but the other person, does all the books and does all of the financial piece like a CFO would do. And under the substantial control definition, both would have to be listed. So you really have to determine for yourselves, you look at your entity, you look at who has substantial control or ownership of 25% or more, and make that determination of who to list on your report. In our reporting tool, we do define that for you. We define substantial control and try and help you map out who are the people that would need to be listed. So once you've determined that your entity does need to file and you figure out who needs to be listed as beneficial owners, here's what needs to be included in the report. So about the entity's full legal name, all trade or doing business as names, the street address of its principal place of business, where it was formed and when, or if it was first registered, and its taxpayer identification number. Now, for beneficial owners, these 5 pieces of information have to be reported. The individual's full legal name, date of birth, residential street address. Yes, residential. You can't put their work address. Their unique ID. So that would be an unexpired US passport, state ID, driver's license, as well as where it was issued and when it expires, and an image of that document. The same is required of what's called a company applicant if your entity was formed this year in 2024 or later. So I'll just take a quick moment. This might be a new term. If you created a small business this year, if you formed an entity this year, and if you qualify under the definition and you're not exempt, you would also have to list who actually formed you this year. So the company applicant is the person or 2 people that actually filed the document with the Secretary of State's office that formed you. So if it is an attorney as well as the CEO or president of your small business, those would be the 2 company applicants. But again, it only applies to entities formed this year. So FinCEN is not forcing entities in existence prior to this year to try and figure out who filed that document with the Secretary of State's office or similar office. All right, let's talk about due dates. I've said a couple times that the January 1st deadline is coming up, and that's because that's the largest group that it applies to. So businesses in existence prior to 2024 were given this year to file. Okay, so if you were created in 2023 or 1980, if you were created prior to January 1st, 2024, you have all this year to file. It is due January 1st, 2025, and it is due to FinCEN. Now, if you were created this year, if you formed your small business in 2024, you have 90 calendar days after receiving notice of creation to form. And starting next year, if you form a small business, you only have 30 calendar days after receiving notice of creation. When do you need to update a beneficial ownership report? So it's interesting. This is a common question. Like I mentioned, I get asked, is it like a tax return? You fill it out once a year? It is not. It is an ongoing obligation. So when we file the information about our entities and our owners with the federal government, with FinCEN, FinCEN wants that information to be current. So if there is a change, you have 30 calendar days from the date of the change to file a new report. So let's talk about what changes would qualify, what changes would trigger the need to file a new report. One of them is the change in company information that you listed. So again, the report requires the principal place of business, all DBA and trade names. If you added a DBA name, if you moved to a new principal place of business, that would all qualify as needing to file a new report. If your beneficial owners change, maybe you have someone else who now has substantial control and they need to be listed. Maybe the ownership percentages, someone dropped below 25%, they're no longer a beneficial owner. That would also trigger the need to file an updated report. Maybe the PII you listed for those beneficial owners has changed. Maybe one person moved to a new residential address. Maybe a last name was changed. So those are all changes that could trigger the need to file an updated report. You have 30 calendar days. And unfortunately, there isn't a separate report when you need to make an update. You just have to fill out the main BOI report all over again. There's just one form. It's one BOI report. So if you have an HOA with 6 beneficial owners, maybe there are 6 board members and the board decided to list all of them. If one of them moves to a new residential address, you would have to fill out that report again and upload those passports and driver's licenses again. So you'd have to start your report from scratch. So what are the penalties? So the Corporate Transparency Act provides for civil and criminal penalties, fines of up to $591 per day the violation continues, as well as criminal penalties, a maximum of a $10,000 fine, 2 years imprisonment, or both. So how to comply? Really, it's simple. You need to file that initial report on time, and you need to file your updates on time. Now, I mentioned that we created a place where you can file your report. And you can do the report also for free with the federal government. So on FinCEN's website, just like you can file your taxes for free, you can file your beneficial ownership report for free. You'd go to the FinCEN website and fill out your report. What we did is we built a solution for people who, for instance, when they file their taxes, maybe they like a tax software provider that has a live helpline and guidance through the form and definitions. That's what we provide. So for filing your BOI report with us, it's $199. Those are some of the benefits that you get from doing it with us. And also we save your report. So that's been a big crowd pleaser, is that when you file on the federal government's website, your report is sent to you in a PDF, but there's no electronic copy of it. So if information changes in a few months, you'd have to start the report from scratch. Whereas on our site, kind of like with a tax software provider, it's saved in the dashboard. So you would just go back to the report, change the one line, let's say a beneficial owner moved to a new address, just change the address and then hit resubmit to FinCEN. So those are some of the value adds that you'd get for the $199. I am going to walk you through filling out a beneficial ownership report on our website. So let me pull that up for you. Okay, here we go. So here's a demonstration of filling out your beneficial ownership report on our site. Notice the live helpline in the bottom right. You can call, you will speak with a human. The form maps to the reporting rule. So the reporting rule requires the legal name of the entity. In this example, Travel to Wisconsin LLC, all DBA names. You have to disclose when you were created. Again, if you were created before January 1st, 2024, then you won't have to fill out the company applicant field. So there's two screens of information about the reporting company. It's very straightforward. You need to report the state you were formed in, disclose if you're a foreign pooled investment vehicle. Again, this is just because the CTA, the act itself, requires different information to be reported if you are a foreign pooled investment vehicle. So if you check that box, then the form will shift. The address is a smart form, but if you are a smart field rather, but if you're in a new build area, you can type it in manually. So now you can review the reporting company section, and once you confirm it's correct, you are a good way through your report. Now we're at the beneficial ownership section. So like I mentioned, we define the terms throughout the form. So we define, what is a beneficial owner? It's substantial control or 25% or more ownership. And we have tips to common questions like there's no limit to the number of beneficial owners. You need to report everyone that qualifies. Another common question, even if a parent company owns you, you still have to report a person that has substantial control because a beneficial owner is never an entity. It's always going to be an individual. We also define company applicant and link you to FinCEN site if you want deeper guidance. So again, the helpful links will help you understand what the form is requiring. But now I'm going to fill out this section for you. So in our example, Travel to Wisconsin LLC has 3 beneficial owners. One of them is me. I'm the person filling out the report. My information was in the system, so I just confirmed it. And now I'm going to manually add the second beneficial owner, who is Pam Parsons. And I'm going to add her 5 pieces of information. So her full legal name, residential street address, date of birth. And as you can see, this is a decent amount of PII that's required to be reported about each beneficial owner. On FinCEN's website, whoever at the entity is filling out this form would need to collect this from all the beneficial owners. A copy of the identifying document for the beneficial owner, as well as the unique ID. So you see U.S. driver's license number that is unique to Pam Parsons in the state of Delaware. You have to include the expiration date, as well as, like I said, uploading an image of that. So a lot of PII to manage, and it's not ideal to have copies of these documents floating around your desk or sitting in your inbox. So a popular feature on our website is the ability to, instead of going through what I just showed you, I could have just emailed Pam Parsons and asked her to upload her own PII into the report. So especially with homeowners associations, this has been really popular. You just need to know the name and email of each beneficial owner. And then from within the system, you're going to send them an email that says, please fill out your PII for this report and upload your required identification. Like sending a DocuSign, it's a good idea to send them, a personal text or email, say, hey, expect this email. It's not spam. It's coming from Wolters Kluwer. I need you to add your information to the beneficial ownership report. If the person wants to just take a picture of their ID with their camera on their mobile phone, they can do that instead of typing it in. And then if you own multiple entities together, once they're attached to one of your reports, you can copy and paste them to other reports of yours. So again, this is popular if a couple or a group of people own several entities together. Once they're in there once, you can just copy and paste them to other reports. If you accidentally add them to a report they shouldn't be on, you can simply delete them. I'll show you how to do that here. Just click the 3 dots. You can resend their invitation. You can remove them. And now the last section, the company applicant section, you have to report the same information for the person who formed the company this year, who actually filed that document with the Secretary of State's office or similar office. You have to report the same information as is required of beneficial owners. Individuals can get what's called a FinCEN ID, where you give your PII directly to FinCEN and they respond with a 12-digit unique number that you can attach to your reports. But the downside is once you get a FinCEN ID, you're under a 30-day obligation to update FinCEN when your reported PII changes, even after you're no longer a company applicant or a beneficial owner. So this is the full report. We did it in a little over 5 minutes. So the entity information, the beneficial owners, as well as the company applicant. On our filing site, again, for some of those valuable experiences and like customer interface that I showed you, it's $199 to make your filing. If you are expecting changes next year, maybe you are a startup and you have, different leadership coming in, you can choose to pay $50 more, and actually your updates will be included through the end of next year. So I know it says through 2024, but now that we're at the end of the year, we've extended that an additional year. So you'd pay using your credit card. You just put in the information as if you were making any other online purchase. And then you're going to get to the last piece, which is required by the rule, is this attestation. So the person filling out the report is certifying that the information is true and accurate. And then you're going to file with FinCEN. So we are an authorized API participant for FinCEN. And as your report is processing, you will be notified when it's submitted. So you'll arrive on your home page, and again, you just remember your username and password, or you can always click forgot if you forget. But this is where all of your reports will live. So again, because this is an ongoing obligation, you can go back to a report that you filed and choose to make an update and just change that 1 or 2 or 3 lines that are changing in the report, and then hit resubmit instead of filling out the whole report again. And you also can keep track of its status with FinCEN. So beneficial ownership reporting, it's new. It can seem daunting. We've tried to take some of the sting out of it and to make it a little bit easier for you. Let me show you where you can go now. So like I said, you can file for free on the FinCEN website, or you can use this promo code. So let me show you what that looks like. Let me share my full screen instead of just, here we go, instead of just my slides. Okay, so I clicked on the link, and I'll put it in the chat box as well. And this will take you to SPAR's homepage for the report filing. So as you can see, SPAR is offering you a discount off of your filing rate. So this is 20% off of the $199, and it's letting us know this is coming from SPAR. So if you'd like some of those user-friendly features, you can file your report here. But yes, in the PowerPoint, I had this slide up, this is where you can file. We also have a quiz. If you're still not confident whether you should file, you click on the quiz link, and this is we'll just walk you through the regulation, 1 question at a time. Do you have more than 20 employees? Are you in an active entity? And if you don't know what that means, click here and we will show you how the rule defines it, so we walk you through the regulation question by question. So let me stop sharing. And I know I asked you to put your questions in the chat box. I see that we have a couple. So the first one is the $199 per LLC or for customers, and you can add additional LLCs. So kind of like a tax return, it is per entity. So if our entity was Travel to Wisconsin LLC, it's $199 through SPAR, 20% off of that, $199 retail to file the report. But then if I have another LLC, maybe I have Travel to Minnesota LLC, that would be the $199, but you'd get $50 off because it'd be your second filing using your same username and password on the site. And it would be, again, the 20% off of that. I think the 20% reverts to 12% after the end of the year, because it's really a push. Last FinCEN shared 25 million businesses still need to file in the next 41 days. They're about 22% of the way there. So they do expect, a filing deluge. Let's look at the second question. Does this apply to S corps and C corps? Can you supply the official US government URL for filing the BOI? Yes, I can definitely put that in the chat. And unfortunately, to this question, the way the rule was written, it doesn't say, for example, S corps and C corps don't have to file, but LLCs do, and partnerships don't. That's not how Congress wrote the rule, and it was written by a bipartisan Congress. The way they wrote the rule is if your entity needed to file a document with a state secretary of state's office or similar office in order to form, then you are subject to the rule. So depending on the state, there are different rules, but if your entity needed to do that, then you have to report unless you qualify for an exemption. So Sherry, I'm going to take a minute and paste some of these links in the chat real quickly. And we can see if, I don't know if Sherry, if you've been emailed any questions or if there's any other way that, if we have any other questions out there. But I only see 2 in the chat box.
I have not been emailed any additional questions, and those are the 2 that I saw as well. So if there are any additional questions, please feel free to unmute yourselves and you can ask questions that way as well.
Let me find the federal government's link, FinCEN. Okay.
And if you're going to SPAR's website to find those links, you can find them in 2 different places. One is under our resources, and then the second place is under the broker page.
Great. Thanks for having it up there, Sherry. And let me just put in the quiz link as well. Here is a quiz. Here is a free quiz to help you understand if you need to file. And some people, they have sought the advice of an attorney or a CPA. I know that can be tough with, paying, a flat fee or an hourly rate for that. If you have a complicated structure, you may want to pay for that advice to figure out if you need to file. But again, you can also use our quiz. You can look on the FinCEN's filing site. They have information under the prepare section. Under the file section is where you would file, as well as on our site, having that, guided definitional experience. So, it's so funny. I remember this time last year, Sherry, FinCEN was considering taking out an ad during the Super Bowl in February 2024 to spread the word because, they were like, how are we going to get the word out that a new report is required? And they decided not to do that. But I did see an ad during a Yankees game several months back. So, okay, we got one more question. What about nonprofit homeowners associations? Why are they included? The board of directors are not owners. Do they need to do a new report if board members change? So nonprofit homeowners associations. So I can't give legal advice, but I can show you where, again, for something less straightforward, where you can look. So let me share my full screen. Okay. I'm on the FinCEN page. So this is the link that I put in the chat. This is where you prepare. This is where you file. Under small business resources, they have this small entity compliance guide. And that's going to take you through, if this nonprofit homeowners association filed a document in order to form, that gets them through the first kind of gate. So yes, they would need to report unless they qualify for an exemption. So then this guide takes you through specifics on the exemptions. So you said nonprofits. So what does tax exempt entities mean? Which ones are exempt? So 501c, and there's some more, 527E1, for 4947A. So you can see like it literally will lay out which types of entities are exempt. Let me see if there's a charitable. See if there's I think there's a charitable exemption as well. Which one would that be? We looked at tax exempt. Maybe it would be considered under I was looking for another line item for charitable organizations, but I don't see it. So it must be described under the tax exempt entity. But yes, so remember that the first test is whether you file the document in order to form. Was the company created by the filing of a document with the Secretary of State's or similar office? No, you're not a reporting company. Yes, you may be unless you're exempt. And then you can look under these exemptions. For the question about the nonprofit HOA, my first thought was to go here to exemption 19. But again, I can't give legal advice. So you may want to double check with someone about which exemption they would read more carefully. But there is not an exemption for HOAs. So, depending on if you meet the first criteria and then if you qualify for an exemption. The second part of the question, do they need to do, the board of directors are not owners. So remember, the beneficial owners in the report are 25% or more owners or have substantial control over the entity. So there are many entities that I've talked with where no one owns 25% or more, or maybe only a parent company does. So you do have to figure out who has substantial control. And then the second question, do they need to do a new report if board members change? So if people who were listed no longer have substantial control, or if new people who were not listed have substantial control, yes, that would be a qualifying change because that's a change in beneficial owners, and you have 30 days to report that. Thank you for the question. Anything else?
That HOA component is a good one. That one tripped me up when I started talking to you guys about it too.
Yeah, and like I said, it's not, and there have been like FAQs. I think FinCEN released over 100 now, so we can always, you can go to their link and read about HOAs there. Yeah, it's not every single one. It's if they formed in that particular way, if they form their entity that way. All right. Well, I don't see anything else. I don't see any like hand raises or anything else in the chat box. I really appreciate you having me. I always feel like I'm the bearer of bad news in a little bit, in a small sense, but we are trying to, the federal government is trying to get a handle on, people who are hiding behind corporate structures to commit illegal acts. So this is what's required. But yes, so SPAR has a resource page, it sounds like, for you. And then I also have some links for you in the chat. So I wish you all the best with this. Sherry, I'll turn it over to you for any closing remarks.
Hey, thank you so much for helping walk us through that, for explanations on that, about the requirements. And again, yeah, we've got that posted on our website. So you guys feel free to reach out to Walters Kluwer. And if there's anything we can do to make your guys' life easier, let us know. Otherwise, we are going to wrap it up.
Thanks, everyone.